All right. So, if you're live with us, this is Temi Falana with Lender Marie Trevino online. All right. So, Marie, I'm going to let you do the introduction for us. Tell us how long you've been doing this. Tell us a little bit about your family, and we're going to be asking you a lot of questions on down payment. So, the floor is yours.
Awesome. Yes, so I'm Mary Trevino Tijerina. I've been in the industry 22 years. 22 years since I first started out processing. Done many roles on the lending side, um, from loan officer assistant to team lead to underwriting liaison, which is where the majority of my expertise has come from, not only being in the trenches doing loans, but also working with that underwriting team, answering questions of other LOs. Allowed me an opportunity of exclusively for a year digging into guidelines. And I was once a down payment assistance expert. Every down payment assistance loan through certain vendors had to be streamed through me. So that's what's got me a lot of my expertise. I am now a mortgage broker on the Stillwaters lending team. My home, my family, and so I'm able to best serve my clients, my realtors, our buyers. You know what I mean? And I know I've found my home to where I can be here to serve my community, which is very important to me, is to serve.
Thank you. Thank you, Mary. And I've worked with you with a few clients, and I like your passion. And that's one of the reasons we're here. I'd like you to share that your passion, especially in the area of down payment assistance, and how you've used that for clients, one of which are mine. So I'm gonna go straight to this by stating to anyone watching us that um, typically one of the major barriers that buyers have is that they don't have enough down payment to buy a home, and most of them don't know that there are various down payment assistance programs out there that can help them cross that hurdle of not being able to save, or um, not having enough for that down payment or closing cost.
Correct.
Now, one of those programs that we have, um, you have used for one of my clients, and it saved them a lot of money.
Correct.
So I'm going to ask you a few questions that few clients have asked me, over the months, over the years, about down payment assistance. And that is, a lot of people ask, first and foremost, who is a first-time home buyer? Because typically, if you're coming to the market for the first time, it's understandable you're a first-time home buyer. But
Correct.
there are other categories to that. So can you explain that a little bit?
Yes. Yeah. The definition is typically going to be someone who hasn't is truly a first timer, has never owned a home before, or someone who has not owned a home in the last 3 years. So if it was over 3 years ago that you did own a home, but since then you've been renting, or and I've had people that they've bought a house and then they weren't able to do it, or situations changed financially and became renters again. So now they're ready to buy a home. You can still take advantage of the benefits of a first time home buyer if it's been 3 years since you owned a home.
Okay, thank you for that. And then the next question is the GPA only for low income earners?
So, DPA, I mean, typically we jump right into DPA, but to me, and I've mentioned before, identifying the need of the buyer. The buyer's need is get in with as least money as possible. So, down payment assistance helps alleviate. You still have a down payment. Number one, let's get that clear. There's still a down payment required. You're going to be required a 3% perhaps on a conventional deal, or 3.5 on an FHA deal. And then the assistance comes into play to help cover that down payment. Some allow you to also use some of the money towards closing cost, right? So each type of program will have its guidelines. The typical would think low income earner is going to be maybe those down payment assistance that have a limit of 50%, 80% of the average median income of the community. You'd be surprised how high that number can now be. So we did have a situation. She was a decent income earner. You're not limited. You can make you can make $120,000 a year and still qualify for down payment assistance because that's going to be more in your 100% AMI. So you can make 100% of the average medium income in your county because it goes by county for a lot of these programs. But the one thing that you don't know because it wasn't our situation is that there's also grants that happen to help with down payment assistance because they're lowering your closing costs that have no income limit. And that's fairly new to many people. It's not very common to have any kind of assistance or a grant that doesn't give you an income limit, which would limit you to a low income family. You can make whatever amount of money. You can make a lot of money. I had one that closed last Friday that got a $5,000 grant, and it did not matter how much money made. The only thing that mattered was her current address. So I thought I'd throw a little some curveball in there for you on that one. So no, not just for low income families.
Awesome. So let me get something out of that. So you're saying that if they have income to, because I think you mentioned that it now depends on the area they're buying from, right?
Yeah, most
So
of the limits that are income limits are by county.
by county. So let's take for instance Collin County in Texas.
Correct.
What would that limit be for Collin County?
Um, Depending on which program,
Program.
the
Okay. So
program
for
we're going
most
with.
importantly, go ahead.
No, depending which program we're going for, I don't guesstimate on anything. I'm a very exact person. Therefore, I would go put the rate sheet for that one and the income limit sheet. So, again, like for instance, the one we used was TDHCA. I go to their rate sheet. I looked up Collin County, and I saw the income limit. So, depending which program I'm using, I'm either going to be limited to the 80% or to the 100%. And then there's some that are actually by household. So your household is one person, two person, four person, your limit goes up from there. And in this case, we were fine. We were fine. So I didn't really have to go beyond that.
I'm glad you mentioned the household because I have a question that also has to do with household asking. So if someone with a certain income, it says I make a certain income, but
Yeah.
it's only me. Can I qualify for DPA like someone making the same income with a household of 4 children?
Yes and no. Household income, a lot has to do with the working people in the household. How many people are making an income? Because one of the programs that I use has a program that might be a slightly better rate, or get you a little bit more down payment assistance if you take into account all the household income. Sometimes that's an issue because if we're qualifying you with just one person's income and we're not
Mhm.
wanting to count the other one because they don't qualify, they don't have enough time on the job, or their credit scores aren't strong, and let's say I'm just going to qualify you by yourself with your income, right? There's programs that are categorized just taking into account what is referred to as qualifying income, not household income. So that's a
Mm,
big in GPA world. Is qualifying income versus household income. Qualifying income is the income that's on the application being used to qualify for this mortgage. And it is an advantage to be able to go that route. It might be a slightly higher rate. So rates become an issue at that point as far as what you're qualifying for. Um, when you're dealing with our market today, right? House prices are higher. Therefore, my payment's going to be higher because we're dealing with a higher rate and a higher starting point, which is the amount being financed. So that's where I call it creative financing. We get really creative to get you to fit in this little box of limitation and still get you into a house.
Gotcha. Okay. So, which means you're going to take care of this qualifying income and household income another day. I'm going to ask you to deal with that. But let's go to the next question.
Yes,
If a buyer is thinking about low down payment, where is the best place to start?
with your lender. With your lender, we're the ones that have to be the experts, and we're the one. We don't need. You don't have to know every program out there. You just have to know where to send them. So your lender's going to be the one to educate you, because it's our job. It's my job to know how I'm going to get you into the house of your dreams with a minimum down, that's out there. And also listen. I always say I have to listen to my borrower, what their needs are. So I don't know what more to say as far as for the look, because you don't want them to rely on their own knowledge. The
Mm,
Everybody reads everything. Everybody's online. Everybody
mm.
has an uncle, a brother that bought last year. Oh, and they only brought so much to closing, or they came with zero closing. Every single buyer is customized. Every single one. No two buyers are alike, ever, ever.
I agree. I agree with that. But um, different lenders tend to do different DPAs, right?
It's
Or
up to you to
can
have.
all lenders do all DPAs? Because you mentioned yourself that you don't do all DPAs, or you don't do some DPAs.
I have access to most of them. I do have access to most of them. And that's again about placing myself where I can better serve my buyers. I will say, when I first came to the broker side, maybe I did not have access to some of the known programs, TDHCA, TSHAC, but that's where it's our job on the broker side to get in connection with the lenders that can offer those, only because it does open the windows to more different types of down payment assistance. I have down payment assistance that will be a second lien. I have down payment assistance that aren't state programs, right? They're from our lenders on the broker side, and then a lot of our lenders now have these $5,000 grants, these $7,000, $7,000 grants, and are offering to pay appraisal. So we have to be knowledgeable. That's what I'm saying. The knowledge has to come from us getting educated on what's out there, and make sure we're offering it. Make sure I have access to offer it.
Awesome. Okay. So, one thing, just to add to what you're saying and double check with you if this is cool. One thing that I tell buyers to also do is do their homework before reaching out to the lender, because that way you have an idea of what you also want to ask the lender.
Sure.
Read through programs online and see what best fits where you are, and then speak with the lender. So that way you have done a bit of homework and you
Yeah.
understand where the lender is coming from. So you're not totally ignorant
Yeah.
of what
I
the
get
lender
it.
is expecting
Yeah,
to you. Yeah.
you as an agent, I can see yourself advising so they can know what to ask me for. Me
Yeah.
as a mortgage broker advisor, that's my job. Not
Yes.
everybody takes it seriously as I do, but it's my job to advise you on what's available to you and what's best for you. Because DPA, I'm going to say it right now, DPA is not always what's best for a borrower. Not always.
You said that. So I'm going to go down to that question, right?
Yes.
So, will before we go to that, if you do a DPA for a client, will it be included in that pre-approval letter that it's a DPA? Because, and I'm going to go to why I ask that, because most sellers, when they see DPA in the buyer's letter, they kind of cringe, like, so does that mean this buyer can't buy my house without an assistance? Which is why sometimes it's not the best option. One of the reasons it's not the best option for buyer, because it kind of makes you um, a bit of
Unfortunately,
less,
like,
you're less attractive to the seller out there. So,
correct.
but a question for you now, Mary, would you include in that letter, pre-approval letter you're giving the buyer, that this is a DPA assistance program, sort of?
No.
No.
Nope.
Good.
You
So it
you
doesn't matter what program it will be in the letter.
No, no, you do not have to include that in the letter. If the borrower is qualified for that percentage of a loan, 97%, 95%, whatever it may be, How they're piecing together their down payment assistance is not the seller's issue. The only thing we have to be careful with is, I'm thorough and I'm quick.
Yes.
I'm going to close it as quick as possible. And if I'm using down payment assistance and I know that the lender I have to send it through isn't as quick as my normal, process, it can't be done in 3, 4, 5 days. Their system requires a lot longer because they have such an influx of DPA loans. And I know they need 30 days. My job with you is to make sure you're writing that contract for enough time to get it closed in time. Where normally, you remember at the beginning with our file, it's like, oh, I can close it in 2 weeks. It's like,
Yeah.
hold up, now I need 30 days. Once I added the DPA to the equation, then I did need my 30 days, and I still got it done, I think, in 28 days. I'm still trying to um, under, what is it? Under promise, over deliver.
So is that
But you do not have
typical?
to close.
Is that typical with all DPAs? I'm sorry to cut you short. Are all DPAs typically about 30 days for the buyer to close? No.
No, no. It's only when you're using these other ones such as TDACA, TSHAC. It's just a matter of how long that underwriting team I call and I ask those questions if I know I'm going to use it. It's like, hey, what's your turn times on initial underwriting? What's the turn time on resubmittal? And I'm going to gauge it based on that. Now, if I'm using one of the DPAs offered through like one of the lenders that I send business to, I treat it
Mhm.
like a regular loan. So just how, and many times and I'll tell you, I just need time to get the appraisal in, and we can close.
Okay, I don't want to forget the question ringing in my head. For the benefit of people watching or listening, you've
Uh-huh.
mentioned TDHDA a couple of times. Can you specifically say, is that the state program for Texas, or
That's
is that
one of them. Texas Department. Uh, I don't have my acronyms written down. Have
so that's a
authority.
state down payment assistance program in Texas. So
Correct.
that can be applicable in other states as well. Like Tennessee has one we call THDA
There you
in
go.
Tennessee. So
Yeah.
something like that. Okay.
Like that.
So if
Absolutely.
you're listening, check in your states, check with your lender in your state, and just find out what program
Available.
exists in your state and see how long that would take. In case of Texas, she's saying that was for
Yeah.
30 days. Yeah.
Yeah. That
So
and the T-Shack. Mm-hmm.
let's go to the next question. So, um, and I think we've kind of handled this, but I still want to ask you. Tell me about DPA programs, and is there an income cap? So, and I think you kind of touched on
Yeah.
that, but can you just within 10 seconds tell us, or a few seconds rather, that
Mm-hmm.
income cap for,
And you can
for
literally look up. The acronym is AMI. The average median income. You
okay.
and then, like you said, you like people being able to do their own research. As
Mhm,
far as falling under it. And
mhm,
the mentality is typically if you make above that income cap, the thought process is you should be able to save up money. But everybody's situation is so different. And
mhm.
with the cost of living going up and everything, they have raised those income caps significantly. And that's the benefit. And I think we're at about 120, $125,000. You would think, okay, someone in that income bracket, why do they need DPA? Well, because cost of living, paying their rent, depending how many children they have. They some people still need help with down payment.
Okay, I'm glad you went there. We're coming to that part where you said they might, be earning 120,000 and still need a DPA.
Yeah.
We're coming to that, but just before we hit that nail on the head, I want to ask, so when they get this DPA, do they have to pay back?
And that's where the different levels of assistance comes into play. There might be one that is not repayable, right? And it's called forgivable. It can be forgiven. There is no second lien. um, but the guidelines may be stricter. So, for example, that may require that you're in the 80% AMI. So you can't make more than 80% of the 120. Okay. And they'll make it a forgivable one for them. Or the forgivable one, just thinking of reading my rate sheets, the forgivable one may require to take into consideration the household income.
Mm,
Where where the non-forgivable will allow you to do just the qualifying income, not the whole household, not all the adults working in the home. Okay, so there'll be different brackets and they'll be rate related. It's a matter, literally, these programs are on availability basis. There might be an FHA available right now with 3%, 4%, but they don't have the 5% available of down payment assistance. Or the conventional, they might have the 3% down payment assistance available and not the 4 and the 5%. So everything moves in brackets and scales. The one good thing on some of these down payment assistance, as long as you, um, we live in the world that we use an automated underwriting system. So the key thing is, as long as you have AUS approval, automated underwriting, right? Approval, and you meet the minimum credit score requirement, which could be 620, 660. And many people's like, oh, I thought you could do DP on the 620. I go, yeah, but automated underwriting has to like your profile. It has to like the credit. It has to like your assets. It has to like your reserves. And there are layering. That's a whole other story, is reserves, which you and I experienced, that you have, some may require reserves. They've gotten real strict on who they're giving down payment assistance to, that they're saying, okay, we'll give you this DPA, but I need you to have 3 months of mortgage payments left over in your bank account. They're in a high debt ratio. Debt ratio is how much monthly debt, once we add on this mortgage, are you at, divided by how much you make. So, and it's a really tight slot to fit people in. To get somebody at 45% debt, it's a really tight number. It's a really tight number.
Okay.
I know I got you thinking, because I went a little bit off.
Yeah, I don't want to jump the gun, because with everything you put together, I'm thinking in my head, so is it worth is it worth all of that? Okay, so
Exactly why I say GPA isn't for everybody.
all right, so from what you have said, there's a question in front of me, and that question is my closing cost more expensive when I use a DPA? Had the restrictions worth it when I use a DPA? Like, so many things that you said now is making me wonder, is it worth it for a client to use a DPA? Or even if I want to buy, is it worth it to use a DPA with all the restrictions? Or I might not be able to, certain income, I might need to bring 3 months reserve, I might, I might have a higher rate, I might need to use 80% of my income. Again, I might not be able to use the full what did you call it, average median income. So tell me, is it worth it?
It is. Here's where it's worth it. If you're not able to become a homeowner tomorrow without it, it's worth it. If you become a homeowner with your own financing and maybe a grant or something else, and you can get into it, the price is right, the cost to get in, I can get you in there with 3% minimum down, or maybe you have seller concessions to help you with the closing costs. If I can get you into a home with minimum cash to close without DPA, and you can afford it, you've got the 3%, you've got the 5%, the non-DPA rate is typically going to be the better one. Therefore, your payment will be the better one. So here's how I end that story is, if the only way you can achieve the dream of becoming a homeowner is by me finding you a down payment assistance to assist you to become a homeowner versus not having a house, I'm gonna recommend a DPA for you, because we want everybody to be homeowners. That's what we're here for. We're here to lend, me as a lender, to help people own a house. And in our situation, if the assets aren't there after all,
Yeah,
we're going to come up with a game plan to get you into your home that you're under contract for.
I'm glad you went that way. And just because of time, we don't have a lot of time. We had a client that was pre-approved without DPA.
Correct.
And her closing cost was about $21,000 when she was pre-approved without DPA. Then she heard about DPA and came back and said, you know what, I can save some money for savings or investment How about I do it without, I mean, with DPA? And you were able to get that to closing, and she closed and had to come to closing table with 1,980, less than $22,000. So if I have to pay 21,000 and I have the option of paying 2,000, why isn't it worth it? And the question in that is, take us through that. Take us through how we were able to do that in the short few seconds that we have. How were we able to do that? How come they got the same rate that you gave them when they didn't have a DPA? You got them the same rate when they got a DPA, and they were able to close with less money. How
It
did
was
you do that, and why isn't it worth it?
a two part. The first part was at a certain rate, at a certain credit score,
Mhm.
that was her rate. So it is a higher rate to begin with because she had a lower score. Okay.
Ah,
So when I layered the down payment assistance on there, I also switched it to a 5% down instead of a 3% down. And we got her 4% in down payment assistance. Again, customizing it and making it work. It was not approving it because remember, I have an automated system. There's an FHAD. It was not approving it with a 3% down. And also, the original loan was based on a 25-year note because it was not approving it with a 30-year note because of her score. So they're compensating factors. It's a balancing act. You know, when we were in that 600, let's say, score bracket, it wanted something to strengthen my file, to strengthen the automated approval, and what it wanted was a 25-year note. Weird, couple of dollars, I don't know, maybe $50 difference on the payment. It did have her in a higher payment, but we were able to, and I'm going to throw out the word, we'll discuss another time, rescore, my first rescore in like 3 years, because she goes, I really want down payment assistance. I'd like to keep some of my money in the account. She had other things to tend to, and therefore I said, okay, let's get to work. And so that required some restructuring, some other planning, addressing credit, addressing payoffs, getting letters, and getting her rescore. So her score was higher, ended up at the same rate because again, the negative factor over here was for scores, and now my negative factor was adding DPA. So the layering of risk. So that's how we still got 7.25.
okay, so in that case, it was worth it, right?
It
For
was
her.
worth it to meet my client's need. If we did not have the $21,000 available, I got her, I believe it was 15,000 with the 4%. So we got her where we needed to go to the closing table. And mind you, I got her 4% in DPA, but this one did require 3 months of reserve. So we still needed some money in the bank account. She just didn't have to bring it to closing. So it was
Oh, she still had to have the 3 months reserve. She just
correct
didn't bring it to closing.
because
Oh
that was
well, our time is up. It's 1:30. Thank you, Mary. Well, thank you for joining us. If you have learned one or two things and you still have questions, please feel free to send me an email, a text, DM me, however. But thank you for joining us. Thank you, Mary, for answering those
you're
questions. And
welcome.
we're going to be reaching out to you for more answers.
Yes, ma'am. I'm ready.
Thank you. Have a good
Bye.
one.
You too.
Bye.